Hmm.
So you went into real estate thinking, all right, good investment in something I can do while I'm still focused on my other priorities or responsibilities.
Right. Yes. And it didn't start that way. I actually went the more traditional route. I sourced some deals that I thought were really good. They turned out to be fine. These were actually luxury condos in the Cincinnati downtown area, and they had a really nice location, great view, and I self-managed those, and I learned very quick, especially in the beginning. I was not the best manager, and I got a lot better with it as I learned. I made some money on those, but I realized it was a huge time sink. And I was working 50, 60 hours a week for my job at the time, which I was a scientist for the Air Force. Anyways, that's when I started wanting to figure out something different. And that's when I started looking at turnkey rentals and turnkey providers and how could I build a business plan that minimized the risk with working with a provider and still gave me the benefits of real estate. And so that's really when I started up on all of it. And that was about August 2017 is when I made my first purchase that way.
That's cool. And you said Cincinnati was the first property you purchased. Is that where you were, like geographically, or was?
Yeah, so the Air Force Research Labs are in Dayton, Ohio. And there are other places too, but there's a really large presence there, right? Patterson Air Force Base. So that's where I was working. And that's, people don't know, that's about 45 minutes north of Cincinnati. And I bought some property there in Cincinnati. And that was, I think, 2011 and 12 when I bought those. And then I sold those and then went right into turnkey.
Yeah.
And that
So
was
those
after some
first,
research too, right? I didn't just go, oh yeah, I think today we're going to do turnkey. No, no, I spent time. I read a lot, researched it, really looked at what my risk sources were going to be. How was I going to handle those risks? What were my expected profits, and how was this going to really develop as a business? And then once I had that figured out, I took action.
yeah,
So
in that Cincinnati, the basically the whole Ohio as a state has
yeah,
always been a hotbed for investments. Like even today, it's
yep.
still a very
Hmm.
good market for rentals.
It is. At least I think it is, and I compare it with a lot of other places around the country. But the price points are good. I you have pretty good landlord friendly laws, that sort.
Yeah,
Rent's decent, so it does make for a pretty good investment state.
yeah.
We had another
Um,
guest that was from Ohio. Who was that? Was it Jesse Lang?
I can't recall
Mm.
where.
I
Yeah,
thought she was her. They talked about their focusing in that area, and then I don't know. It was she was an interesting guest. Not to get
yeah.
us sidetracked, but
Mhm.
how long were you in the Air Force?
Oh, so never was actually in the Air
Oh,
Force.
just a
I was
scientist.
just a scientist working there. So I
Okay.
finished my PhD in 2009. I actually started with at the Air Force before that. I was a co-op during my undergraduate. So that would have been about 2002 forward. And
Okay.
then that lasted until right around 2021,
Oh
roughly.
wow. Okay.
So
Nice.
2021. And that's when I went self-employment. And it was in different capacities. For a while, I was an in-house contractor. Last 4 or 5 years, I was with another company, and at that point, I still supported a lot of effort with the Air Force, but I was also working on stuff for NASA, Navy, and
Wow.
just a lot of DoD type work. So
Awesome.
Yeah, that's a cool world that I know nothing about, but I know that it's
yeah,
it's a fun world.
you get to work on some neat things.
Yeah,
Projects that only the U.S. government could work on because of
yeah,
the expense. And so it gives you a unique opportunity that way. But it comes with, other things too. Like everything, it's good and it's bad. So
Yeah.
yeah.
Sure.
And I'm envisioning the audience like turning up the volume and seeing what secrets you're going to let out that you're working on
none.
that the public doesn't know about. But we'll move on quickly so you don't go there.
Sure. Oh, it's easy. Yeah.
Um, all right. So you mentioned something a little bit ago about you were in school, you graduated, and your
Mhm.
thought was, where can I invest? That is
Correct.
not a thought of many recent graduates from college. So where did
No.
you get that bug?
I that came with the idea of, I'm working and enjoying this, but I wanted the ability to choose, right? And you know, maybe when I'm 30, I don't care as much about that ability to just have that flexibility and choose whether I work or not. But at 40, 45, I saw other people as they continue to work where they wanted more control over if they had to work or what happens if you get sick, that sort. And so for me, it was just, I guess I'm a planner and it really stems from that. And it just stems from observing other people and then realizing that yeah, I should probably have a plan. Now, to be fair, the first few checks after I finished my PhD completely blew that money. So I had a house, I bought a nice pool table, I bought a bar, I bought some cinema seating that had like the electric controls, and then I bought a theater and a nice foosball table. So the
You
first
were
two
enjoying life a little bit.
I enjoyed, and I needed to do that. I was wound pretty tight when I finished my PhD. I was tired. You work a lot, and so it was kind of nice to just finally be able to spend. Realize at that point, never had any money. When you're in school, you were broke.
Yeah.
You hear about ramen noodle dinners. That's no joke. You really have no money.
Yeah.
And so it was just nice to finally spend a little bit. And then after that, I got serious. So,
Yeah. Well, it sounded like you were a little bit serious before that, because even before the
Oh,
show,
yeah.
you were talking about your lifestyle, and it
Mhm.
sounds like it was very disciplined. You
It is.
mentioned you're a morning person.
Yeah.
You wake up at what time?
Anywhere from 5 to 6.
Okay.
Just depends. Normally it's around 6 these days, but it used to be 5. But that's just how it is. Get
Yeah.
up early, get my coffee, and then I get moving. And I
Yeah.
already know exactly what I want to do for the day, and I just don't stop until it's done. And
Yeah.
sometimes that makes for late nights, but you do what you got to do to just be productive and achieve your goals. And that for
Yeah.
me, that's what worked.
Yeah.
So
And that is, I think, a key component to being um, self-employed, because you
yeah,
don't have the office you go in where they're
no,
like, they give you your task and that's what you complete for the day. You have to
right.
create tasks that are being done for the day.
Yes, you very much are in control of exactly what you're going to work on, and you have to be very disciplined. You have to first be able to identify what's important and what's not, and spend your time wisely. And then after that, it's not like you're held accountable by a boss or something like that. So you really have to put processes in place, keep you on track, and keep you really moving. And
Yeah.
it's not hard. It's just a different way of thinking, different way of doing things. And once you get used to it, it's fine.
Yeah. Yeah. And I'd agree, because I have like a whole morning routine. Like I wake up and I'll lay in bed for a little bit, which seems lazy, but I'm usually just like thinking. I'm
Mhm.
going through my day of like, okay, I'm gonna get in the office at this time. I already have my list like made up from the day prior
Mhm.
of the things I want to get done the next day.
Mhm.
Um, I'm an advocate for the ice bath. I'm like still
Okay.
shivering from my soak this morning. So I like to get things moving and going right away. It
Mhm.
sounds like you are the same.
Yeah, I think you have to do that. Otherwise, it's just too easy for an hour to slip by or 2 hours. You just got to get up, get moving, and get focused. And the sooner you do that, and the sooner you get your body and your brain firing, the quicker you're going to actually get something done.
Yeah.
So,
Yeah, and you had mentioned some of those safeguards that you put in, or your discipline things that you put in, like you mentioned to check your emails and then put it away so that you
yeah,
can
I
have that
do.
like
Put it
deep
away,
thought.
set my phone aside, put it on silent. Just because you're working, a lot of people think you're self-employed. They think you're not working and they can just call you or text you. And it's a distraction. And, that 30-second phone call or text message, you're going to lose a lot of time because once you put your phone aside, you have to go back and get focused again, get back on what it is you're doing. And that doesn't just happen instantly, at least not for me. Other people, maybe that's a strength of theirs and they can do that. I can't. I very much need to stay focused when I'm focused and just keep cranking. And so
Yeah.
once the day ends, sure, then I'll check my phone and email that sort. But
Yep. Well, I'm with you on that one.
mm,
The amount of people that are like, you never answer your phone. I'm like, yeah, I know, because that exact thing, that
for that
30
very
second
reason.
phone call just like derails what you
Yep.
were in. And now once you hang it up, you're like, where was I? And then
Yep.
you have to like, I feel like I have to get back into my mental state that I was in. And it
Oh, I
takes
very
a
much
little bit of
have.
adjustment.
Yeah. Yeah.
So I do try to limit that as well. So I second where you're on. I like that one. Um, okay, going into your first deal, I want to dive into that a little bit more. Uh,
Sure.
where first I'll start out, where did you find it? Like, how did you come upon this property?
Okay. Yeah. So first deal, I'll talk about turnkey provider first. I assume we want to talk about the turnkey property that I first bought, not the luxury condos. And so this would have been August 2017. At this point, I had spent a lot of time researching turnkey, and I was really just ready to go. I had done a lot of research, found a provider that I felt very confident in. I knew exactly the metropolitan areas that I wanted to target. So this is actually Memphis, Tennessee. And the house met all my purchase criteria, which I'd already established going into it. So this was financial criteria and then also some economic indicators. And really, it was just sourced through a provider. There was a lot of checks, I guess, boxes that I had to be met for, the renovation too, right? Everything needed to be new. And so I passed on quite a few properties. That's one of the benefits of working with a provider. They have a lot of properties, so you can be very selective about what you buy. And so that's really how I did it. And as the properties came in, I had an Excel sheet that I used as a calculator and quickly determined what my returns were going to look like. And then I looked at some other factors, did it meet all those criteria? And then as soon as it met the criteria, pulled the trigger, and that was it. I bought it. It was 2017. It was $119,900. And the cash flow after all fixed expenses was about $340 a month. So yeah, you don't make as much money when you source your deals through provider. But what's important was it was still very good returns, right? It was going to be about a 25 to 35% return if you looked at everything. So this was taken into consideration, lowering your taxes with depreciation. Obviously, the appreciation, which at that time I didn't know what it was going to look like, but it turned out to be very good. And even if you were to use the national average of, say, 3.8% for single family homes, it was going to put it somewhere in that 30% range for the year, for the first year of operation. So I felt that was fantastic.
Yeah.
And that was really it. And that's how I got started. And it worked out very well. And so I bought another one at the very end of the year. Then I bought a few more, and I just kept buying.
Nice.
Really
And these were
enjoyed it.
all single families?
Yeah, yep. And I know a lot of people are like, oh, well, you start with single family and then you can work into multi. And there is some truth to that. But when you're working with turnkey providers, they have so many properties that, even for people who have millions of dollars, they can continue to provide property, and you'll be able to continue to find properties that way. I like single family. I have looked at multi, but when I was looking at it, the price per door just didn't make sense for that asset class. And it'll come back around again. And so in general, right now, yeah, I'm very much about single family. Although really I'm not buying at the moment. It doesn't meet my criteria, the current market condition. That doesn't mean there isn't stuff out there, and it doesn't mean there's not reasons to buy. It's just for my goals, objectives, and risk, I'm not buying, but it will come back around again. I'll buy single family or I'll buy multi. It just depends what asset class has something to offer that I want.
Yeah.
That's really it. Take what the market gives you. Don't force it.
Yeah. And I was going to ask on that. So I'm going to put the pause button on that one about you not purchasing. And we're going to touch on that in a
No,
little
that's
bit.
perfectly fine. Let's do that.
Because where we
yeah.
invest, we do basically BRRRR. So I
Okay.
will
Yep.
find the worst property. We've got a
Yep.
construction wing to our company that they will go in, basically
Right.
flip it, and then
Yep.
we now created this turnkey, but then
Mhm.
we rent it and manage it.
Right. And then you keep it in-house, refinance your equity out, try to do
Right.
it again.
Right.
Yep.
And that is becoming difficult with home prices
Yep.
and what you're getting. So I was
That's a
like,
tough.
okay, on the turnkey side, what are we going with? So we're gonna come back to that one.
Sure.
But going back to this this Tennessee property, this first one, you found the property through this provider. Where
Yep.
did the financing come from?
So it was actually a bank called Stifel. And the thing is about turnkey providers, they want to sell houses. And so they realize they're going to work with people maybe like me, right? A professional who maybe I don't have all this network stuff figured out. Maybe I don't have a lender. Maybe I don't have an insurance broker. They're going to make sure they have that available for you, different lending sources, right? And these are going to be conventional loans, so the rates and stuff like that, they're not going to fluctuate that much. And of course, you can also always go out and look independently too at other banks and just get a feel for, are the rates reasonable, are the loan terms reasonable? So the first lender was Stifel, and I still use them today. I really like the underwriter there. I've talked to him on the phone. He answers questions for me. So it's been a very good relationship, but I made that relationship actually through the provider. And so that's how I source the loan.
In that regard, you're saying I'd rather, I guess, lower my profit up front and use the
Right.
provider to make sure I have that network when
Yep.
you're playing the long game. Like in
Right.
these investment strategies, you're playing the long game. So you give up your short term to make your long term.
Correct. I'm stepping in at somebody else's exit. Essentially, a turnkey provider is doing something similar as you, right? You're finding this house that's, got a lot of deferred maintenance. So you're going to buy it in cash. You're going to then do the renovation work, and now you're forcing some equity in there, right? So some forced appreciation. And then you're going to choose to either keep it as an investment or flip it. And so I'm stepping in there when it's a flip and I'm buying that asset and then going forward with it. And so I do give up some of the profit, right? You mentioned that, but I'm also only working a couple hours a month max. And it doesn't matter if I have one house, 10 house, 20 houses.
Yep.
It's still 2 hours or less a month. And it's that way through the whole process. And that was very appealing to me because I was working 40 and 60 hours. So I understand how to do the active side. I have done some of that, and it just, for my schedule, it was very tough.
Yeah.
Once you get moving, right, and you've outsourced a lot of that business, and you do have a good network of contractors, your involvement is less, but it takes work to get there. And I didn't have the resources. It didn't fit my my lifestyle at that time.
Yeah. But that on the flip side of that, that's a golden ticket for you where you found your niche to where you can fit in.
Exactly. Yeah,
I
and I can
mean,
still benefit from real estate. And I don't have to tell you this, that real estate is a great investment vehicle, right? With all the tax benefits and stuff, and just that hard asset, it's great. And so yeah, it was a niche that I could actually get into, and it's worked well for me.
yeah. Yep. And with you carrying your full-time job, obviously you in your where you were saying like you couldn't take on the burst strategy, so you went to turnkey.
Right.
But you can't negate the fact that 40-hour, 50-hour job you were doing also allowed you to get the financing you needed.
Exactly.
So
And
there was a pro to that.
yeah, it was. It gave me a resource that I could leverage, right? That was what the job was doing. I had extra money. And I know
Yeah.
not everybody has that. And turnkey isn't for everybody. But what's nice about real estate is there's so many different things you can do with it. And if you don't have the resources to go turnkey, at least in the beginning, you can try to source your own deals and try to find something cheaper. Although, I'd argue that's challenging too, right? Because that's a cash purchase. You may have to look at hard money to complete some of your deals. But once you get going and start actually establishing good systems and a track record, it'll become easier for you.
Mhm.
And then, of course, if you really develop a real company flipping houses where you're flipping multiple per month, you're going to have extra profits. You could siphon some of that money and buy turnkey, right? You don't have to take time away from your bread and butter to try and set up a property management company, for example.
Yep.
You could outsource that, but of course that requires you finding a good provider. And they are out there. There's some bad ones and there's some good ones, like everything else.
Yep. And that's actually the next topic because you find the property, you
Yep.
finance the property,
Yeah,
you're still working full time.
right.
Did the provider also have that network to, hey, here's a property manager that can manage your property?
Yeah, and so when I source out a provider, I'm looking for somebody who, obviously they're putting together their marketing campaigns to funnel leads, right? So they're doing that. They're the ones funneling that lead. They're the ones that are renovating that property. And sure, maybe they outsource some of that with contractors. Everybody does. And they may have some, in-house contractors. They have a good scope, right? They know how to do this part of the process. And they're the ones that are going to be screening for tenants, and they're going to turn it over to their property management team, which is an in-house company. And of course, I like to see that they also have their own rentals, and that their rentals are in the same neighborhoods that they're buying from me. And that's important because if there's a lot of demand for their product, which there is, a lot of people would love to step in on an income producing asset that's just ready to go. They might try to source deals in neighborhoods that aren't that great for long-term rental to meet that demand. So you want to see that they are buying in that same neighborhood. But when you buy, you're really stepping in after there's a tenant. There's already management in place. Your job is to make sure you ask the right questions. How are they managing that asset? You're going to want to know about their vacancy. Did they, what percentage of the scheduled rents are they collecting? And that'll help you identify if they're actually targeting the right neighborhoods. Are they managing at a high level? And if you don't have a good idea of what those numbers should be, interview a lot of people, a lot of management companies, and you'll start to see their numbers. You'll start to tell the ones that aren't going to be very good from the ones that are going to be very good, and then apply that reference to the turnkey providers that you are interviewing. And from there, you can find one that's legitimate.
Yeah.
That's roughly how I do it. There's obviously more criteria. I actually have it set up as a checklist. I have it set up so that all the action items in the checklist are the questions. And I actually put what you should be looking for in those checklists. And I do it because I don't want to forget to ask something.
Yeah.
And I do it because I have family who've asked me how I'm doing this, and I can't be there all the time. So here's your checklist. This is exactly how I do it. Right. And then as I learn, because I've made mistakes, but none of them been catastrophic, I've added them to my checklist. Right. So as I learn, I adapt.
Yep.
As the market changes, I adjust my checklist accordingly.
Yeah. And I'm glad you brought up those questions because we early on, this might have been like season 1 of the show, we talked about like what questions you'd ask a property manager or a contractor that you're hiring, even if it's not a rental property, just if it's at your house and you're getting your kitchen remodeled. What questions do you ask the contractor? Because I feel like that is such a key thing. And I just don't want homeowners or new investors to get the cold feet where they're like, I don't want to be disrespectful and ask the weird or tough questions.
No.
It's like, don't look at it through rose colored glasses. Like, ask the questions because they're gonna pop up, and you might as well get
your money on the line.
Right.
Ask the questions.
Ask the questions.
And if they're offended by it, it's probably because it's somebody you don't want to work with.
Yes, you'll know very quickly if you're going to get along with them or not.
Right. And there's other people to work with. So if they can't answer your questions, don't look at it like, oh, I didn't establish that relationship. Not a big deal.
Yeah.
Go talk to the next person.
Yep.
Just keep talking to people, and you'll find some that will answer your questions and answer them well, that you'll feel comfortable with, and you'll begin to build a relationship with. It's that simple.
Yeah. And you get to find out what I guess what niche they're into. Like, what do they do well? Because just like you and I have different investment strategies, neither one is wrong. No. But if you try to put a square into a circle hole, whatever they're saying is, like it just won't work. So you got to find out what shape they are, what process have they put in place to help them be successful. And they may be successful, but they may not be successful with the way you want to do it. Right. And all it is just understanding where they're at, and they need to understand where you are at.
Right. So, and it's also about you, right? You have to look at your goals, your objective, your resources, your risk tolerance, and you need to find something that fits that, or adjust something to fit that, and then go forward.
Yep. And I'm hoping you put all that stuff in your book, correct?
Oh yeah, no, it's all
Good.
in there.
Good.
I didn't hold back. I put everything in, anything I could think of that was relevant in the book. All the checklists, everything I do, et cetera, all the fundamentals, all the math. You want to know how to calculate mortgages, all that amortization, all that. It's all in there. Models. You want to see what a financial forecast looks like for 20 years on a property, including expenses. Okay, what about if you include scaling and you use national average? It's all in there. And it's in there for a reason. It's in there to help identify very important pieces that we need to include in our plan, right? Include in these checklists. And that's the whole purpose of it. But yeah, I put everything in there, all of it. How I screen, I talk about maintaining posture, right? You're worried about this turnkey provider not selling you the house wrong. They want to sell you a house. Maintain that posture. You'll get better results long term. It's all in there. It has to be. Otherwise, I'd be doing a disservice. So,
Yep. And it's called Passive Profits.
mhm.
So we will put the link in the show notes for everybody
Sure.
listening. So you can obviously buy the book and read more of those questions and get more into the X's and O's of what you're talking about here on the high level on the show. So we'll make sure that we provide that to all the listeners, because there's going to be a bunch of knowledge in there. And I feel like the investment strategy you have would apply to a lot of these people trying to get in, because they're probably starting a little bit later. They're in their career. They don't have the time to do this full time off the bat. They're going to have to do
No,
stepping
exactly.
stones and
That's
remove
exactly
themselves.
who it's geared for. And all you got to do is look at your 401k and think, yeah, maybe I do want something else for retirement.
Yep.
And
And we just had a show, a lady who had moved in from outside of the US, came here on a plan. Everything got switched around through COVID. She found her way to real estate. And she's kind of in this position where, kind of like you, where you're not buying right now. She's in a holding thing.
right.
She's like, I don't need to, because my income right now fulfills my lifestyle. So I'm happy right now. We'll wait for things to correct, which is, I think, very, very cool. And more points to you guys where you can do this while you hold a full-time
Right.
job.
Yeah, and it really does depend on where your portfolio is at and where you're at. For me, I stopped buying in 22 because we were entering what looked like the hyper supply phase, or at least the last quarter of the expansion phase of the real estate market cycle. And what comes after hyper supply is recession. And even if we don't have a big retracement, there wasn't any need for me to be really taking on those risks. So instead, what I started doing is focusing on my debt, right? I was looking at loan to debt ratio, that kind of stuff, and how much income I was making, which I'm down below 50% debt on my portfolio. I have great cash flow, 2-year leases, everything I need to ride through a recession. And it doesn't mean that the recession will happen. It's just, for my portfolio, that was the best choice for me, and also for my risk tolerance. And again, it come down to just where we were at in the market cycle and where I was at. And I'm more than happy to just do some of the other stuff I'm doing. And then once we resolve some of these issues, it could potentially trigger a recession. That's when I'll jump back in again.
Yeah.
I don't have to be aggressive, and that's really my choice.
Yeah. And as you're speaking on that, I got a thought of, I forgot the book title. E-Myth Revisited. I believe that was the book title.
Okay.
He talks about the delineation between working in your business and working on your business.
Right.
And when you say I'm going to jump back in, yeah,
Mhm.
like buying homes is working in your business. That's what it is.
Right.
But
Yep.
in this little period, you're working on your business. You're
Correct.
fine-tuning the little things that you have, where you're paying down your debt service.
Yep.
Well, you're not going to be buying on these inflated prices. Where I don't know how your numbers are working, but all the money you're making, you put into your debt service to pay that down. So your cash flow will increase as you pay that down.
Right.
Are
And I
you
don't
still
have to actually, oh, sorry, go ahead.
Oh, I was just gonna ask, are you creating a little nest egg for future purchases? Like when prices do drop, is that like
Yep.
you're okay, now we're gonna be on the
Oh
buy
yeah.
side?
So what I have is, I take what the market gives me, right? So I have a high yield savings account, waive the escrow accounts, put the money there. My escrow balance is always about 40K at least, right? So now I'm making 5% on that money, and then I can use that to either save for what you're talking about, funds to invest later when things make more sense, which I am doing that. As far as paying down the properties go, I don't need to make extra payments, right? There was a lot of appreciation that still happened at the end of that hyper supply phase. That's why I stopped buying. You still have a lot of appreciation. Realize that most of that appreciation comes at the end of the expansion phase and that hyper supply phase. So between that and just having really low rates, where I'm getting a lot more loan pay down. So that's just, people don't know, that's part of the mortgage payment that's paying down your balance. And so it's generating principal or equity. Anyways, just those two factors is what's really driven down my loan to debt ratio. Or yeah. And or loan to value ratio. Sorry, I misspoke. And that's how I'm down, around 50%, a little below that. And so for me, that's perfect. And then the rest of the funds are just going into a high yield account. I'm pulling about 5% on that, and I'm just letting that build. And I'll use that when the market is better. And of course, I am in other stuff. I trade options. I have algorithms that do that I write. And so I do other things too. But the point is, as far as real estate goes, that's where I'm at right now. And so I didn't have to actively put more money into my deals to pay down debt. I could just let the market forces do it for me, and then simply sit back and enjoy the high interest rates as they were going up. There's a plot in the book that shows this, but if you look at rental rates and you plot that as a function of time, and I plotted this, I think I started it from the 70s and I did it all the way forward. And then I plotted what the interest rates were for a mortgage. It's not going to surprise anybody. As mortgage rates goes up, what happens to rental rates? They go up. Why? Because there is now demand for rentals, right? You don't want to buy in that kind of market. So people move into an area and they go, well, I'm not going to buy a house, I'll rent. That puts demand for rentals, and the correlation is very clear. And so it was just a matter of, okay, well, rates are going to go up, no problem. These forces are taking care of my loan to value ratio, and this is going to take care of profit. And that's what's happened. And now I'm actually getting a lot of profit pushed in. Now there were some unforeseen things where we had a lot of appreciation, and the assessors jumped on that very, very quickly, quicker than I thought.
Oh yeah.
I knew they would, but I thought, well, they say every 3 years they're going to reassess. No,
there are
that's what they tell you. It's every year. If it's kind of like sharks. They smell blood in the water. They're there.
Yeah,
and, that happens pretty rapidly.
Yeah, you think the municipality is going to lose out on that tax money? I don't.
Well, I knew they wouldn't, but I thought they would at least honor their statement of, yeah, we're going to reassess every 3 years. No, they didn't. They jumped right in there.
Yeah, I just refinanced the house that I'm in. We bought it at an auction, and then we built it in cash, and it was just sitting with cash value. Right. And then we're like, all right, I think now is the time. We missed our window where we could have got locked into those on the lower rate, 3%. But the assessor came out, and that was the one thing I didn't really want to see him. I was cordial.
Though, because he's going to appraise that's going to get reported, and then they are going to assess you, and they're going to go, yeah, he bought it for cash and this. That doesn't matter. Here's the appraised value. Time to send him his new property tax bill. You can contest it if you go and find good comps, similar houses that have price points that are a lot lower than yours. You can try to wiggle a little bit lower, but I do that, but it is tough. I bat about 50% on that. You can give it a shot though.
Yeah, it doesn't hurt. All they can say is no.
Doesn't hurt. They can just simply say no, and if they do, fine. And otherwise, maybe you get lucky and reduce your taxes.
Yeah, and I think the only hard time to do it is the first time, because once you ask the question the first time, the second time isn't as difficult.
So much easier because you've already done it. You have experience with it.
Yeah, and the same thing with inspectors. The first time you get into, I wouldn't say a disagreement, we'll call it a disagreement with an inspector. and you have to push
Yep.
back a little bit. I got like the same nerves that I would get like as a like my first college start where you get all nerves and you're
Yep.
shaking. When I had to like push back on that inspector the first time,
Mhm.
it was a little eerie. Like I felt like I was
Yeah.
doing some like I was talking back to my parents. Like didn't
Yeah.
feel right for me.
You're not supposed to do that, supposedly, right?
Yeah, you're not supposed to, but it's sometimes it's needed.
You
Um,
have to sometimes. Look, if you don't defend yourself, nobody else will.
yeah,
It's that simple, and everybody steps out of line sometimes. And
yeah,
sometimes you do. You just let them, hey, what about this? There's a good way of doing it, and you can go that route and see what happens. But yeah, it'll make you nervous.
yeah, absolutely,
So,
absolutely. Um,
mhm.
so have you thought of? I'm going future now.
Sure.
So have you thought of after the correction happens,
Mhm.
are you geared up to go uh spread your umbrella a little bit wider? Because I know that you started in Cincinnati, now you're in Tennessee. Have you been researching some markets that may be
Oh
possible
yeah.
for you
So
to go into?
for full disclosure, I'm actually in 7 different states. So
Okay.
at this point, yeah, I'm all over the place. And I want to do that, right? I want to diversify. I want a metropolitan area that has XYZ industries, right? And big employers. And my other one maybe to be ABC industries, right? Something completely different, uncorrelated. I like state capitals because you have government jobs, but I want that diversification. So yeah, I very much am all over. I'm in Arkansas, which I actually think is going to be a really good state to be in the next expansion phase. I have property in Oklahoma. I've got property in Tennessee, Missouri, Ohio, Georgia, Alabama. So I'm all over. The easy way to really pick, or at least to get a good start, just go where people want to go. Look at the population growth, right? Well, first thing I do is I look at metropolitans that have at least 500,000 people, right? Your product is housing. You need people. That's step one. Step two, look at how many people are moving there. What is their population growth? Compare that to the US average. If you find a place where people want to live, even if you don't do anything else, you'll start looking at deals there, and then the financials will quickly tell you if you want to be there or not. You can look at multiple cities like that. Eventually, you'll find one like Little Rock, for example, where maybe it has good cash flow and good population growth, and you like the industries that are there, and you can start buying there. And so that's how I go about doing that. And so yeah, no, once we get through the correction, if there is a correction, it may not even be a correction, right? We may just stay flat and then start to expand. Then yeah, I'm very much ready to jump in and start expanding my portfolio. I have tons of equity, cash, things, the equity will depend on interest rates and whatnot, but I have cash as well where I can jump into the market and start buying again. And
Yeah.
I'm looking forward to it. I'm really ready for it. I think this next expansion phase is going to be a very unique opportunity. And basically, I mean, think about the replacement cost for a house, right? It's really high now after all this inflation. So even if we do have a retracement in price, where is that going to go? Well, it's going to have to snap back up pretty quick, right? Why? Because replacement cost is so darn high. It's a lot higher than what it used to be. And if you go and you start looking at the number of houses that were built during this last stretch, it got cut off short because of the Fed stumping in, right? The government intervened. We didn't really have a normal end to the cycle where there's a lot of building. And you might hear me say that and think, well, is he telling me this, or is this real? Go pull the number of permits that builders have to submit when they go to build a new property and look at those, compare them back to 2005, 6, and 7. We're still low. And then look at them from the years after we went through our last crash in 08, right? So in 08, we had a lot of supply, but there was no building being done.
Mm-hmm.
And eventually that supply was absorbed by growth, population growth, and then no more properties. That's why we have some demand. So I think there's actually some demand there. The replacement cost is actually a lot higher. And when we get into this expansion phase, instead of being flat like it was in, say, 2011, 12, 13, 14, I think we may see appreciation rates that are actually higher during the expansion phase from, the last cycle. And I very much want to benefit from that.
Yeah.
So that's kind of my thought process on it, and realize that as the market changes, my narrative changes, right? I include that, and I'll continue to collect data and just what is the economy really saying, try to ignore all the noise, and then structure my plan accordingly and try to figure out how to best position to take advantage of it.
Yeah.
That's currently my plan right now. And so obviously, if I'm thinking there's appreciation, what do I want to do? I want to get my asset number up, right? I want as much value as I can get there, 3 million, 5 million. Because if it's a 4% appreciation rate and I have 5 million bucks, if property value, that's $40,000 of appreciation per million, right?
Yeah.
So that's a big deal. That's $200,000 in 1 year.
Yep.
That's that's really the game, is just figuring out what you think is going to happen and try to position yourself to take advantage of it.
Yeah. And you'd mentioned a lot about trends, and you've mentioned a few times through the show. I actually was at a meeting with my broker yesterday because of the whole changes with the NRA, in the buyer's agency agreement and all that stuff.
Yep.
But through the slides, they had one where it showed the trends from 1990 to today. And
Yeah.
the average home price in 1990, do you have a guess of what it was?
I'm gonna go with about, see here. Let's go with 70,000.
Okay.
That's
Dan,
my
what do you
guess.
got?
1990,
That's a guess.
85.
Remember, I was 11 in 1990.
I was just born, so I have no idea what's going on in the
Yep.
market. I was shocked. It was 190.
Really?
So we're
190,
we're
okay.
low. I am shocked because I think the last one I read, and this is for Wisconsin, so it's not comparing apples to apples, but I think Wisconsin was like 360 as an
Okay.
average home sale.
I believe
So
that, yeah.
from 1990 to now,
Hmm.
vastly different numbers.
Yeah.
But
And
it's always
Yeah.
cyclical. In like through the
It
trends,
is.
you see some up years and some down years. You see bigger and smaller up and downs, but it's always cyclical. It'll always go
And
back.
that cyclical nature that you're referring to, it's the real estate market cycle for people who aren't familiar, and it's actually been measured back to the 1800s with housing in the US, and from peak to peak on average is 18.6 years, and the variance is actually pretty tight. The shortest it's ever been is about 15 years, and I think the longest is like 21 years.
Can you
And
repeat that again? Because those are some good
yeah,
numbers.
it's
I don't know
actually,
if everybody was
it's in the
listening, but
book
those are
too,
good
actually.
numbers.
But yeah, so the real estate market cycle, they've been recording it since the early 1800s for the US housing market. And the average length from peak to peak, so this is when the market peaks to when the market peaks again, is 18.6 years. And that would also work for trough to trough, right? Recession to recession. And then the variance is actually very tight. I think the shortest it's been is 15 years and the longest is 21. So let's think about today. When was our last recession? 2008. So let's do a little bit of arithmetic and add some numbers there. And when do we think that next one's coming? Anytime.
Yeah.
Right. It
Anytime.
actually fits with the historical data. Now, what I find fascinating is the cause of every recession is always different. But yet the average is so tight, right? It's a very small variance. So all these different reasons why you go through a recession, whether it was land speculation in the 1800s or what have you, and yet it's still right around at 18.6 years.
Yep.
I find it fascinating. I do study that, and I actually do incorporate that with, which I mentioned earlier because of the hyper supply phase part of it, but I do incorporate that with how I build or buy houses. And I do watch that carefully.
Yeah. And that is tough because, like with real estate, I've always mentioned, like, it is a numbers game, but you're dealing with people, especially in the rental space. You're dealing with people, but you have to delineate what you're looking at. And when you look at a property, the most, I don't want to say the most beneficial, a beneficial thing to do is take your emotions out and look at the numbers of it. And if you can boil down to these 18.6 years and your variance, like if you can know the numbers and what things are going to trend, you may not know why or what the cause is, but the numbers aren't going to lie to you. That is what has historically been happening.
Exactly. And the thing is even if you do buy at the wrong time, housing has always gone up over a long enough period.
Mm-hmm.
So maybe you got in at a basis that wasn't good. If you're cash flowing, just hold tight, let the market slowly work through the years, and eventually you'll look one day and it'll be 20, 30,000 more than you paid for in value.
Mm-hmm.
And it, you know, the market will bail you out eventually, so long as you have the reserves to ride through a rough patch. And that's, I think, also something important. So, you know, that's why some people say, well, don't try to time it, just get busy and get working on it.
The
And
Warren Buffett philosophy.
yeah, yeah, and that's not a bad philosophy. And you realize nobody can truly time it, right? I can't tell you
Mm-hmm.
if a crash is coming. I don't even know if there is a crash coming. I do think that there should be something coming. You can't take a hammer to the economy and expect it to not respond in kind, which
Yes.
happened recently in the last few years. And so I do think something is coming. I don't know
Yep.
what, I don't know when, but it does fit with the historical narrative
Yep.
on timing. And so I just choose to honor that, and I include that. And you know, you can tell, right? Go try to, like you were saying earlier, when you were looking for your deals, it's harder to find deals.
Mm-hmm.
It's that way across the board. You
Yeah.
know, I go to look at a turnkey, they don't produce the money they did 5 years ago. You know, the total returns are down around 20%, not the 30% that I used to see. It'll come back around,
Mm-hmm.
but you know, you can use that as your bellwether indicator, right? Okay, well, I am going to buy today, but I know that I'm only going to buy if I have the 20% total return. Oh, I can't find that. Probably means the market isn't giving it to you and you should wait.
Yep.
And
Yep.
so it's really that simple.
Yeah. And
Yeah.
we're not alone in that thought where there's a it's
Well, there's a
slow right
lot of
now because
people.
you talk to brokers like real estate
Yeah.
brokers,
Yep.
their agents are slower. The brokerage houses as a
Oh,
whole
yeah.
is down in volume. You
Mm.
look at lenders, they're down in volume. Like
Yep.
everybody is down in volume.
Everybody is down. And it, you know, for people think, well, yeah, the interest rates, right? It's not just because of the interest rates.
Right.
That's part of it, but that's not all of it. There are other fears there. There's a lot going on in this market. And
Yeah.
what's
There
going to
was
be the
also,
catalyst? No
yeah.
idea.
Yeah, and add to this on an election year. So while this
Yeah,
is all crazy, we're
exactly.
adding an election year in.
Yep.
And another slide that they showed last night was the
Yep.
correlation between each election cycle.
Yep.
Interest rates go down, but house
Mhm.
prices go up.
Yep.
And it's like every single year that is
Oh,
something
it's
that happens.
correlated. You can see it. There are very real trends that follow presidents in their first, second, third, and then fourth year of office, right? When you get into those election years, things change.
Yep.
And if you go and you look at historical data on it, it's actually correlated, and you can see it in there. And it is interesting. And yeah, so I am watching the election too, and I don't plan to do anything until after results
Yeah.
are in.
Yeah. We'll see what happens. Because that got brought
Yeah.
up because the feds were talking about another rate drop in
September.
September. Yeah.
September,
And
yep.
that is literally what the numbers were showing, that usually around that
Yeah, yeah. So
October
Wall Street
period.
pretty much factored in an interest rate drop in September. I think it'll happen, but I'm not sure it's happening for the right reasons. And I do find it funny that everybody wants to blame Powell for all these problems, and they want to ignore the fact that the problem started before he raised rates, right? He raised rates to combat inflation. The inflation happened because of a lot of just poor decisions, well, by your politicians. They're not, you know, and I guess I'm not going to step too deep into that, but that is an opinion
We
that
can
I
make this a
have.
political show.
Huh?
We'll change the title.
What's that?
I said we'll change the title. We'll make this a political show.
Oh, there you go.
No,
Go
but
ahead.
you can't deny the fact that like a lot of these things come from the politicians and the lawmakers.
They do.
Not to
They
blame
the
them.
policy.
Yeah, you can't blame them as people. I'm not attacking as a person. You're in a
No.
position making decisions.
Right.
You got to see that your decisions affecting what's going on.
Right. You know, and to be fair, I don't get to see everything they see, right? They get to look at a lot of different factors, and they're getting advice from a lot of different experts on the economy and different things like that. And so you know, they're making a choice based on that information, and I don't have that. So for me to judge them without knowing everything, it isn't really fair. Although I still do, but
You get
you
your
know, maybe I give
opinions.
opinion to myself.
Yeah, you get your own opinion. You do.
Right, you do. You can't help it. And you know, and I look at some of the choices that have been made. It, you know, where we're at wasn't a surprise. That's why I stopped buying in 22. January of 22 was my last purchases too. They were new builds. They were in Alabama, and I stopped for a reason, and that's because I could see what was coming. You know, and with COVID, you basically raise spending to wartime levels. When you dump money into the market like that, even though everybody's like, "Oh, but the market went down," only temporarily. When you dump that kind of money in there, it's such a stimulus that the
Yep.
economy just exploded, and they had all these low rates and stuff, and that's really what drove inflation.
Yeah.
Of course, Fed has to combat that and try to bring inflation back down, unless people like the fact that things go up 12-15% per year. I don't.
No, no. There was just a video yesterday. This guy he bought his groceries online and he
Mhm.
went back into the app like 3 or 4 years later and he hit
Look,
buy again.
yeah.
And first time he bought it, $140.
Mm,
Now he said reorder and it was like 415 or something like that.
yeah.
Just like a giant spread.
Huge increase. Yep. Yeah,
So we
and that's
can't
And
deny
less
the
quantity
facts
of
on that
food,
one.
and less quantity of food because the sizes are smaller, but the prices went up.
yep. Yep. A gallon's no longer a gallon. It
No.
Yeah,
says gallon, but it's not a gallon.
right.
Ice cream, for example. Yep.
Yeah,
Yeah.
that's amazing. And I'm like you said, I don't know if a crash is coming. I don't know if a correction's coming. The
Right.
facts are telling me that it's around the corner.
Yep.
We're on this election year. So everything's kind of pointing that way. I'm always curious what dominoes are going to fall and what happens. Because you
Mhm.
can plan for something and we're like, all right, this is how we want it to work. But humans are humans and things
Right.
will happen. So you never know
Things will
exactly how everything's are going to fall. And that's always my curiosity. So for you to take a pause and say, like, I'm going to wait for the dust to settle here,
Mhm.
very smart, responsible move on that one.
Yeah,
If
I'm
you
really
do that,
evaluating risk, right?
right?
It's finally increased to where I was ready to take a step back, and that's really it. And
Yeah,
it may not come true, right? Or it could be everybody's worst nightmare.
yes, yep. Um, would you give any advice to somebody? Let's say because you've got years under your belt with investing.
Yeah.
What would you give that new investor that, all right, I'm working my W-2, but I'm putting my foot down. I read your book. I'm in. How do I start in today's market?
It's, I think, actually pretty simple. Just look at the market and take what it's given you. If you're working and you have money coming in, save it, put it in a high yield account. Wait until your criteria are actually met. So in the book, my book, I actually have my criteria there. It's a starting point for you. Adjust that to fit your needs. But once you have your criteria in place, stick to them.
Mm-hmm.
Put your money in a high yield account, wait for the right opportunity, and when that opportunity presents itself, and it will, take action and jump on it. And it's really that's how you got to go about it.
Yeah. And I
Take
like
what the
that.
market gives you.
I like that. It's not like jump in, force your hand and make a deal work.
Yeah,
There are
don't
so
listen to
many
some of these
things.
gurus that tell
Yeah.
you that.
Yes.
So,
And like I know when I got into it, I started as an agent. I didn't buy my first rental. I I actually went on a showing with a broker. He showed me this duplex. I wanted to buy a duplex, like really, really bad. It
mhm,
must have been in 2014
mhm.
when I was looking for that. After the fact, I went and sat and had coffee with him. And he's like, "Hey, what's your long-term plan?" I was like, "I just want to be full-time in real estate. I don't know where I'm going to start yet, but that's where I want to go."
Yep.
So I ended up becoming an agent. And
Mhm.
the amount of learning that happened while I
Oh,
was not working, like I'm saying, in the business, I'm not buying
mhm.
properties, I'm not going to auctions, I'm analyzing properties, I'm creating a nest egg for that opportunity. Because what happened is you have some closings, you save all that money. Now you've got your nest egg of, for me, it was living expenses. Like, can I go 6 months without getting a paycheck? And that was my big thing. So I'm creating that nest egg. And then all of the properties that I've analyzed, all the closings that I've had, all the agents I've talked to, all the title companies I've talked to, that's all just creating this network and this like,
Network.
it's like my practice before, or my spring training before the season starts. And then when you get that deal, like you're saying, when that deal crosses your table, then take action. Then it's game time. But
Yeah.
wait for game time and do your practice work. Save your money,
Right.
analyze your properties. All that stuff is free.
Yeah, no, that is, and that's really key. Preserve your capital.
Yep.
I believe that's Charlie Munger that talks about it, and also Warren Buffett. But essentially, protect your capital at all costs because it's hard to recoup a loss, a big
Yeah.
loss. Yeah.
Yeah. So as long as you don't start off on the wrong foot,
Right.
you're right.
Yep.
Make sure that first one's at least, I wouldn't say a home run, but make sure your first one's
Yeah.
solid. Because
Well,
that is,
it needs to be solid, yes.
Yeah.
And you're going to learn a lot from it, and you're going to do a lot better as you go forward after it.
yeah. And I would say you're going to mess up on the first one. So make sure you got a solid
Yeah.
deal to mess up on.
The
There's
only
going to be
starting-
something.
Exactly. The only people that don't mess up are the people not doing anything,
Right.
which is a mistake on its own. So there you go.
Right.
Yeah.
So very cool. We're up on an hour. I don't want to keep you any
Okay.
longer.
Fine.
Was there anything that we didn't touch on that you want to get out to the audience? I know we're going to put your book in there. We're going to put a
Mhm.
link to your website so people can
Okay.
contact you. I would highly recommend contacting you for these new
Yeah.
investors that that were in your shoes, have a full-time job, maybe have a family, don't have that all the time to do the hands-on investing.
Right.
Like very, very good avenue, a very smart avenue to invest in.
Mhm. Yeah, no, I guess I'll just kind of reinforce that. Go to my website. You can reach me there. There's a lot of resources there and tools. They are free. It doesn't cost you anything to send me an email and ask questions, and I will respond. If you're serious about doing this and you send me an email, I will respond, and I hope it helps. And that is the only reason why I do this is to try to help other people. So
Yeah.
take advantage of that. And that's really it. That's, I think, what I'll leave it at.
Yeah.
Very cool.
And I'm gonna put my 2 cents in. It's awesome that it's not a training course that people have to buy $1,000 training course thing. Those are the
shouldn't be
people that I
Yes.
like referring, because those are the people
Yeah.
that genuinely want to help you succeed.
Right. Yeah, and you shouldn't be spending your money on that. It's okay to buy your internet service so you can do research and learn. You need your money to invest,
Yeah.
not pay somebody else for something you could find easily on your own for
Yeah.
free.
Yeah. And I'm not discounting the people that you pay for courses, because I
No.
think there are some stages that you do need some
Right.
help if you can't get there.
Mhm.
But when you start your career, like there's so many free resources. I know from living it, there are a lot of free resources you can get through to get your thing started.
Mhm.
And then as your thing starts picking up speed and you have some capital to expand, you can
Right.
pay for some knowledge that you get and some
Right.
courses and all that.
You can fill those gaps that way when you know what
Yeah.
the gaps actually are. But just giving somebody $20,000 to go to his courses blindly, I mean, it's a lot
Risky.
of money. Yeah. And if you think I'm making up that number, I'm not.
Oh, I've
go
seen
look
some
at this.
courses around that price.
They're high.
Yeah.
And the information might be very good, but I don't know if it's $20,000 good or whatever the number is. Not when you can find it for free, and it's actually good for you to struggle a little bit looking at it. You'll remember the answers better that way.
Yeah. And you do build some discipline, because at the end of the day, when that course is done, you're back on your own 2 feet.
Exactly.
So they'll teach you the X's and O's, but they won't teach you the
Process.
process or the tenacity, the dedication you need to keep going with it. And I think that needs to be developed. That can't be given.
Yeah,
So-
no, you have to develop that. It's a skill and it takes time.
Yeah. But everybody can do it.
Everybody can if you want to, right? It's all about
Mhm.
what you want to do.
Right.
So,
And if you're listening to the show, you want to get into real estate, you're going to want to call Scott.
yeah. Yep,
So,
definitely.
all right, we are going to wrap it up. I'm not going to keep you past the hour. We will make sure to put that in your book in the
Okay.
website, the show notes for everybody to take a look at. Otherwise, I'm going to let you get to your weekend. Hopefully, you're not in the office all day.
Oh, well, yeah. I mean, like I said, I trade options. So I have algorithms that are running, and I don't do anything, but I do watch them, and I like to keep track of what's going on there. And then I'm trying to put together a bunch of just videos that teach the entire book and put it on YouTube, all the way down to like the checklist and everything. So I've been working on that, and while I'm watching the market, and
Yeah.
it's, it's like I said, it's a good life. I can't complain. But that's what I'll be doing today. So, but I
I
won't
like
sit
that.
here the whole time.
Yeah.
You
So
gotta.
the YouTube thing is that's
Mhm.
an expansion off your book. So you're
It
drilling down
is.
the book, making it more of a video.
Right, because
Okay.
not everybody learns from reading. Some people need to hear it. And not going to hold back everything in the book. I'm just putting in a video, and I use ChatGPT to create the images so that it's not a bunch of words, right? So I can actually create any image that I want, which is a unique experience. Before, when you're putting in all these talks, it's hard to really have the right image to make things flow properly. But now I can do it easily, so it's great. And so yeah, I'm gonna put all of it in. I got a long way to go before that's finished. I got about 80 slides done so far, but I will complete that and then record it and then make that available to people. And I think that'll help a lot. I think
Yeah.
it's different when you hear somebody explain it to you and use analogies and stuff. Uh, Gives you, well, even if you understood when you read it, just having that second touch from a different angle can help reinforce some of the ideas. So
Yeah.
that's the goal. So that's my big project right now.
That's cool. We'll keep an eye out for that for sure. I
Alrighty.
love YouTube University. Talking about free resources, YouTube University for everybody.
And I benefit from it too. So, I feel like I should be contributing. I
Yeah.
go there and I watch all kinds of stuff, and then I have to, fact check it, make sure it's legitimate. But, you can find some guys that are just fantastic that are,
Oh yeah.
sharing their information. So,
Yep.
yeah.
I would be lying if I said I never used YouTube.
Yeah.
Like the amount of things I've learned. I didn't come from a contractor. My dad was not a general contractor or in real estate.
No.
The and I built my house. I
Mhm.
use YouTube
Okay.
all of the time. Like,
Hmm.
what's the proper way to put on a gutter? Like something simple that you'd be
Yep.
like, "Ah, that person knows." Nope, YouTube University knows though. And they'll give
Yeah.
you like 10 different versions of how to do it and it's
Right.
crazy, like from coast to coast, there's differences
Oh,
in
there's
styles and
differences. Yeah.
materials, and
Yeah.
it's super cool.
Yeah. And then like it's pretty quick when you start watching these videos, like, okay, yeah, this guy just wants to make a video. Here's this guy knows what he's doing. You can
Yes.
tell. And it's you find those nuggets. It's pretty interesting. You can really learn a lot
Yeah.
from it. And yeah, I love it.
And
So
like channels. There was one guy that every stage, and I would be curious to see how long it took him to do this. He built the house from scratch, from a plot
oh,
of land,
yeah,
excavating, foundation, all the way
yeah,
up. Every segment was a different video with timestamps
yeah.
of like, if you want to know how to tuck point, go to one minute 25 seconds. It's
That's
so detailed.
yeah,
How to do stair stringers, like a whole segment on
yeah.
is fascinating. So
And
like
that
I like that channel. I can go to
yep.
any resource on there. It's amazing what you can find.
Yeah, and that's right up my alleyway. So in college, in summer I actually worked digging basements. So we did
Ooh.
foundations.
Oh,
And
how fun was that?
yeah, it was great. Yeah, I was busy. I
Yeah.
needed money, and we were working. This was in the late 90s, right? So the economy was really expanding. We were building houses like crazy. So I was getting 60, 70-hour weeks. Perfect. I needed money, and I had a chance to do that. It was, and I was busy. It was a new job every day, right? So uh, it, it was nice. So we get there in the morning, you'd lay out where the house is going to be, kind of set the elevation after you found the Y pole that comes up off of the. So basically, you got a main line, and then there's a riser, and then they'll put a wood shank that comes up called a Y pole, so that you can find it later after they've buried the main line. So this is when they're doing development, and so we would go in there. And of course, the surveyors had already been there and put stakes, where the house was going to sit. And then in the morning, we'd find that Y pole, and we would run the sewer into the house. So this is just, you know, a dry sewer line that's going into the house and then bury it. And then once we knew where that was, you know, that establishes the fall for, you know, 3 things you need to know as a plumber, right? Water flows downhill.
Yes.
And
That's an important thing to know as a plumber.
yeah, you know, payday's on Friday and don't chew your fingernails at the other two. But but anyways, so you have this riser that comes up that establishes how deep you can put the house, right? The grade of where the house is going to sit. And so then once you have that established and you've got it laid out, then that was when we would stop for lunch. And then in the afternoon, you go back in, you begin digging. And so you've got an operator, and then what I did, I was on the ground, so I was, you know, I had a shot pole where I could tell them deeper here, less there, push the crumbs out of the way. I would leave it for the footer crew because they need to backfill all their forms. And then sometimes I'd go out on with the footers and do that too. And but it was good. And then we did perimeter stone, right? So that's after you've got the foundation, you lay stone and you build a, you dig a sump, that sort.
Yep.
Yeah, and so I did that, and but so I'm trying to think about this guy doing it from scratch, like that's tough.
Yeah.
That it was
You know how to
the series
operate.
is so long.
Yeah, and holding grade, you know, is not easy.
Yeah.
Backhoe when you're digging
Yep.
foundation, and then you know trying to form all the footers, and you know, and that's not horribly hard, but getting that laid out and accurate and
It's
stuff,
technical.
it's technical, and you can't be
Technical.
wrong.
Yeah.
You don't want your wall can't not sit on the footer.
Right.
So
Right.
it's yeah, and I'm just
Yeah.
thinking about all those different jobs, and to have somebody step in and do that, that's challenging. And so the house in Georgia that I was a former personal residence, I did that full renovation, completely gutted, did the whole thing by myself, wiring, I rewired, you know, all of it, and it took me 2 years.
Yep.
And I'm just thinking about, and that wasn't even like building it. You know, I did frame the basement. I had to rip out the basement and refinish it, but just trying to think about somebody doing that, and then like roofing and all of it, which I've done a little bit of all this, but to do the whole process, you know, eventually you want to live in it. I don't know if I got a decade to actually dedicate to something like that. I mean, I would love
Yeah.
to do it just because I enjoy working like that, but it's
Yeah.
that's tough.
Yeah. And it's funny you said, because as I'm watching this video, I was like, man, I can't wait to be in your shoes. His construction company is like running on autopilot. He's got properties. He
Okay.
is literally doing
Yeah.
this I know how to
Fun.
do this. I want to
I'm
build
gonna do it.
my own like forever home.
Hmm.
And I'm also going to put out content because I can, and it's helpful. And he's
Yeah,
not selling it as a package. He's not like, buy my blueprints. He's just like, hey, here's this, and this is how you do it. I've been a contractor for 40 years. Here's what
mhm.
I've learned.
Send me the link if you don't mind, because that's the kind of
Yeah.
stuff I like watching, and you know, I learn a lot from it. And then I also learn on, I don't know if you've seen some of the ones where they're showing, where inspectors go in and inspect stuff, and they're showing like some of the crazy
Oh, I
things that
love
get,
them. We've
oh
tried
my,
getting them on the show.
Yeah, I've reached
it's
out to several
crazy. Some
of
of
those
the
inspectors.
it's,
Yeah.
yeah. Oh, some of the stuff that the people like contractors do and leave is just like, oh my goodness, I do want to know how to do this.
I
I
know.
actually
I
would
know.
like to do the work myself when I see some of that, you know.
Especially on
Yeah.
the new builds, it's mostly the new builds, and you're like
Yeah,
the one guy says that ain't right. Like he
Yeah.
always
yeah.
puts that out there, just like
If you're listening to the show, if he can come
yeah,
on, that'd be great. No, his Instagram or social media things
Mhm.
are so there. He makes it entertaining because you don't see many inspectors with a personality.
Oh,
Some do. I'm not saying all.
there's
Some don't.
surprises. Yep,
Yeah, they're usually like EXO. They come in,
yep.
here's what's wrong with it, and then they get
White
out.
shirt, tie.
Yes, he
Yep.
has such a cool way to spin. Like, it's wrong. We're gonna get it corrected, but like, I don't hate you. This is a funny joke, but like, it's not a
yeah.
joke. We got to fix it.
Yeah, other
So
people that live here.
yeah, the way he
Someday.
portrays it, very, very funny, and it's
Mhm.
knowledgeable. Like, I watched an
Right.
inspector yesterday. Um, he he pointed out someone tried painting vinyl siding. And have you ever seen painted vinyl siding a year or two in?
Feel. Yeah.
It bacons.
Oh,
Like
does
the
it?
heat hits,
Okay.
oh, it's terrible.
So it
And then
actually does adhere, and then the different thermal expansion coefficients is what's causing it to buckle then.
yep, and
It
vinyl
sounds like.
always expands and contracts. So like where
Right.
they painted, now
Right,
you got a
joints.
big old seam color there, and
Yep.
all the panels are warped because of the sun hitting it. But then you go to the other side where it's shaded, it
Jaded.
expands, but it doesn't bake in.
Mm-hmm.
So I was
Probably
like, oh,
cracks in the
that's
paint.
super cool. I've never painted vinyl, but now I know I can't do that.
I won't paint vinyl.
So it's things like that where I'm like, oh, that's interesting. Or it poses a question of like, oh, all right, he's inspecting a home in Georgia.
Mm-hmm.
Is that the same code as Wisconsin? Because state by state codes are
Yep.
different. So
Well,
then you go into your code book
Yeah.
for your state and you read. Just live in that world and just taking in more on it is
And Georgia in the 70s did not have a building code. There's no way after working on that house, there's absolutely no way it had a building code.
I love seeing those houses.
Oh,
It was interesting. So the basement, they put a wet bar in, and this was the builder that did this. And so this was 1978. So this envision of Atlanta Falcon red carpet. So that was
Ooh.
nice. Yeah, I had to get that out of there. They put this wet bar in, and I'm walking with the inspector, and we're looking at where the stack pipe's going out to the septic tank, and it's above the wet bar. I'm thinking, where do you think the water for that sink goes? And he looks at it, he goes, oh, you need to get a plumber in here. I'm like, I know what they did. It's going out the wall there, and sure enough, once I ripped out everything, they literally put a penetration out the wall of the basement. The grade went like this, and so then the pipe was just right above grade, and they're just dumping it into the backyard. And they
Really?
left this hole that was like 5-inch hole with a 3-inch pipe went out, and they never sealed it up. And so it's right at grade. And so every time it rains, that water comes down, and it was washing into the basement. Yeah, I bought a real fixer upper. It turned out really nice though. It was 4,000 square feet finished, and once I finished with it, fantastic, nice, clean house. But yeah, the whole basement was rotted out and had a bunch of mold and all that good stuff. So yeah, which I was going to get rid of that Atlanta Falcon carpet anyways, right?
Yeah. And like stuff like that, you can equate to the time. But we just looked at a house 3 or 4 months ago. Somebody put the DIY shower in their basement, but digging up concrete's difficult. So to dig out my drain and actually connect it underneath the floor into your lateral, very, very hard. So what they did is they put concrete blocks and then set their shower pan on that.
Well, they got fall now.
Yeah, and then from the drain is a PVC pipe onto a gutter right by their floor drain. So it just goes out the shower into the floor drain and out.
Nice.
And I was like, that's creative, but like I don't think that'll pass.
No, that's definitely not the code.
No. So I had to take pictures of that one because like you see just some crazy wild stuff.
That's special. You need pictures of that.
Oh yeah, we keep that one. We've got somebody didn't want to enclose their main that comes down from the, I think it was a 2-story. So their stack that comes down goes into the bathroom on the basement level.
Yeah.
So they did some like paper mache thing to make it look like a tree. Okay. So you just got like this paper mache tree covering your plumbing stack. I got a picture of that one too.
Well, I do like trees, but I kind of prefer them outside.
Outside.
the real deal, not
right. I mean, it was cool. It's like a cool arts and craft project.
Yeah.
Why?
It's not something I'd have ever thought about.
No.
Or wanted to do.
Yeah. Well, I'll get you the reference to the YouTube guy.
I want to see that. Like I said, that's exactly the stuff I like because for me, I want to learn about that stuff. I'm not the best. I've done a lot, but not enough. And I'm always watching it, learning. And then I do want to build a house at some point.
Yeah.
My final home, if you will. And I've got crazy ideas on what I want done there, but I'll spare you that.
That'll be for next show.
Next show,
you're going to be back in the buying pool. You're going to be back purchasing stuff, and you'll be able to think of and start creating that blueprint for your next home.
Yeah, well, I've got a pretty good idea of what I want, but I'm patient. I'll wait until it's the right time for it.
Yeah.
You did mention the next show. If there is interest and people come back with a lot of questions, I'm more than willing and would love
Yeah.
to come back and do another one.
Yeah.
Just keep that in mind. I don't know if that's something you do or not, but
Yeah. I like doing it because
Mhm.
I feel like the audience, they need to be able to see more and more people keep with it and see success, even if you're in a pause right now. We've interviewed, I think, 5 or 6 people. 2 of them have literally hit their limit. I bought all I want to buy. I'm not buying anymore. I'm happy with it. Some are in your state where like we're holding and we're just going to see what happens. And I think those people, with all the Instagram and the influencers of like more,
Yeah.
sometimes more isn't better. You got to get to where
No.
your spot is. And I
Yeah.
think that's less intimidating for people to get in, thinking like, oh, I don't need to make $3 billion and I just need to
No.
create, even if it takes half of my salary, like
Yeah.
that, I'm happy.
Yeah. It's a big pet peeve of mine when I see these gurus are like, look at my mansion and my $200,000 car, my bucket of money. You could do this too. You just got to buy. Don't question it. Just buy. Oh, and give me $20,000 to teach you how. It's like, come on, man. That's
Yeah.
not real.
Yeah.
It's not real. You got a net worth of $2 billion, and most of it came because you charge people 20 grand for these courses that you then put to work in the market. I mean, let's
Yeah.
keep
I'd be
realistic.
curious to see how many properties come out of those membership things, because that's a
Yeah,
down payment for a house right there.
it
So you
is.
get 100
That's
people to sign
exactly.
up for the class. You just got 100
Yeah.
new doors.
Yeah, you just convinced your or negotiated your way out of a house.
Mhm.
Yeah.
Like you gave away your first investment property.
Yeah. That's
It's
I never thought about that way, but
yeah, and that's what I was
angle for
getting at. It's
sure.
like don't give them that money. You need it to buy your first investment. And in the beginning, the only money you have coming in is going to be from your job, and it takes a long time to save money. You
Yeah.
can't you
Especially
can't
now.
give that away, especially now.
Yeah.
You can't give that away. You
Yeah.
need that. So
Yeah. Yeah. Well, we will do a second show.
sure.
I think we'll touch base, make sure you're back on the buying side. So, because
I will be.
I want to see Scott's mental preparation on the buy side of things.
Yeah, it's very systematic. I mean, I have criteria, and I literally I just stick to those. And then I also look at my portfolio, and I actually choose to optimize mine based on taxes. And so if I refinance, I'm very much looking at how I can keep my tax rate essentially zero on my portfolio.
Yeah.
Uh, and then of course my purchases, I do the same thing. Do I need a higher price point property that fits my metrics to, a little more, depreciation, et cetera. But it's really those pieces and dials that I twist to try to, and that's how I do it. I
Yeah.
don't like people saying collecting money from me, so that's how I choose to optimize as I build a portfolio. And it's interesting because the way the portfolio evolves over time, you start off, you get these properties that I call cash flow houses, and they do well, and then of course in normal conditions your profit outgrows your expenses, and so then you start to have to pay more and more in taxes, and at that point you can basically reduce your whole entire portfolio into just four numbers, right? It's revenue, expenses, asset value, and debt. And then from there you can look at what your tax liability is, and then of course you going to buy another house. Okay, well, that would adjust that financial state. And so I just find houses or different loan products to adjust that value so that my end result on taxes is as close to zero as I can get it. And that's how
Yeah.
I actually evolve my portfolio. And then, as I said, you start with these cash flow properties. Maybe they're 3, 4, 2 bedrooms that are 150 to 250K. You start dipping into the 300, 320K to still accomplish those goals. But what you're now doing is you're hitting houses that are going to have a little bit higher appreciation rate, something above the national average. You're actually starting to shift more from cash flow to appreciation, and it kind of happens naturally because that's just what the portfolio needs to stay optimal for taxes. And then the income is there, and so then you start to actually diversify that way, and it kind of just comes about naturally with the plan. And so that's what it looks like when I do it. And when I
Yeah.
am doing it, I will
Yeah. And that's the
love
level 2 to
about
the
it.
investing.
Yeah. It
And I
really is.
like that. So I'm curious, and we don't have to put this part in the
Oh,
show,
sure.
but I wonder if like the second time through we can go
Mhm.
through and like analyze like
Mhm.
the house that you're looking at, or if that
Oh,
you just
yeah.
bought or something like that, and you can go
Yep.
through your 1, 2, 3. I went through this
Mhm.
process. I looked at these key metrics, and this is why I chose this property, and this is what it's going to
Yeah.
do for me.
No, I think there's a lot of value to having case studies like that. And I think people need to see that so that it gives them confidence. You know, they think, well, maybe I'm doing this right. I'm
Yeah,
sure I am. Maybe I'm not, right? But if they see somebody else who's doing it, it's like, oh yeah, he's doing what I'm doing. He's not doing anything magical. It's the same
yeah,
thing. And I think that provides a lot of value to people. So yeah, definitely would love to do that.
that would be fun. I
Yep.
like that one. So yeah, we'll keep in touch for sure.
Okay.
Um, and we'll set up that next show because I think that'd be a fun one. That'll be our first official case study on the show.
There's a lot of value in case studies.
Yep.
So book has a bunch of them in there. All the numbers in that book, my book, are the actual numbers of one of my portfolios. And
Nice.
that's yeah, so the numbers in there, those are legitimately the numbers. And I actually share it that way because then, you know, then it's easy to keep it legitimate. Uh,
Right.
and so that's, yeah. But yeah, so I'm definitely more than willing to do case studies. And like I said, I think
Awesome.
there's a lot of value to that.
All right. Yeah, we will tag that one for the next show. That'll be fun.
Sure. No, that'd be great. So
Awesome. All right. Well, have a good rest of your Friday.
you too. You too. And again, thank you. Thank you very much
Yes.
for having me on.
Thank you. That was good. It was good knowledge for the audience, and I learned something. That the cycle thing, I didn't have those numbers. That was super cool. So I selfishly was like, "Can you repeat that so I can write this down?"
I saw you writing. I was like, oh, good, because it's great to see somebody learn something. Everybody learns something. So,
Oh yeah.
but yeah,
That's the
no,
whole
good
point of
luck.
these shows. I love talking to people and learning what they do because I will be the first one to say my investment strategy is not the right one. It's just the one we do.
But it
Everybody's
works
got
for
something to
you.
bring.
Yeah, but it works for you, and
Mm.
nobody can do it perfectly. I'm not doing it perfectly. Nobody can. You just do the best you can. On the real estate market cycle, there is a blog on my website that goes into a bunch of it if you're curious. Um,
Oh
so
yeah,
let me
right
see.
here.
Yep. Yeah. And then it's in
Economic indicators and their impact on real estate valuation.
it might get a little dry, but it stays to the meat.
No.
So
This is my so when people turn on the TV to watch I don't know, whatever they watch at night, I'm
mhm.
usually like reading these type of things, these
Oh yeah.
dry,
Yep.
boring content. That's what I'm reading.
Oh, I do the same. Well, you can tell I do the same. I mean, I'm a sponge and I like learning. And of course, it gets harder and harder because you're like, oh, I've already learned that. I've already learned that. But then you run into something like, oh, I have no idea what this is. This is perfect. And then
Yeah,
I absorb it, and I look for that.
yeah.
It
No, that's
make for
cool.
a good evening.
Yeah. I will be checking out these blogs for sure.
Yeah, yeah, check them out, and if you have questions, ask. I was serious when I told people to contact me. I legitimately want to help. So, um,
Awesome. Yeah, we'll promote you as much as we can. We'll get you this file as well so you can
okay,
use this show for some of your marketing as well. Um,
okay,
but yeah, I will push people your way if they need some help with the turnkey stuff because that's one where um, I don't think we've bought a turnkey rental.
you don't really need to. You
Yeah,
have good systems in place to just go the more traditional route, source your own deals and do the renovations. But there are others, that are working full time and have extra money where turnkey would be a benefit for them. But
yeah,
for you, it just, unless you're like, oh man, I got all this extra money sitting here and I just can't find anything else to flip, then maybe, but really you're better off just letting that money sit there for a good opportunity.
yeah, yeah.
Yeah. And then, you will find deals. Once you
Yes,
have your marketing in place and it's working and, you've already scaled up your marketing because you have money coming in, you're going to keep finding deals. So you'll always have a use for your capital.
yeah.
So
And
what I
that's kind of what we're
better do.
doing with
Yeah.
where we're at because we've got the construction side and then me and Dan kind of focus more on the buy and hold investment side.
Yeah.
The construction crew and the foreman, like they've
Mhm.
got their stuff. I talk to them every couple times a day, maybe.
Mhm.
Uh, but
Well, that's
I'm in the
perfect.
office. I'm with Dan. So
Mhm.
we're building our marketing strategy. Dan has
Yeah.
been like the keystone to
Mhm.
any analytics of properties and marketing pieces that we have. And we're trying to build that out and get, because our marketing for the past like 5 years, a
Mhm.
couple $100 maybe. Everything was word of mouth. You'd find a deal here, find a deal there. Like as we're wrapping one up, someone's out there, but we've never been offense, and that's what we're building. So I'm in like this wild west of like me,
Yeah, but
Dan,
that's
and our other owner are putting our heads together. Like, where do we want to focus on? What type of property? All those key indicators you were talking about, like where are people moving to?
you're
Like,
exactly where you want to be at though. This is like if you really want to make money in real estate, this is where to do it.
yeah. So I will be asking my questions to you. I'll say I'm asking for a friend, but
That's fine.
it's me.
I'll answer your friend too. So,
Awesome. Well, we will talk real soon.
all right.
Thank you so much for the time. I
Oh, thank
appreciate
you
it.
again.